Look, everyone's obsessed with shiny numbers. IRRs, DPI multiples, vintage years like trophies on a shelf. It's exhausting. You sit there, drowning in spreadsheets, hoping to spot the magic formula that screams, "This fund is a winner." Usually, you just end up more confused, more frustrated, wondering why your capital is tied up in some black box while your gut yells, "Run." The truth nobody told you? None of that superficial stuff really counts if you don't dig deeper where no one wants to look. Here's where it gets real. Stop worshipping past returns alone. Yeah, returns matter, but they lie without context. A fund might boast a killer IRR, but who's managing it? Who's actually making the decisions when the pressure's on? Ask yourself, does this fund have operators who've been in the trenches, built companies from dust, and survived the worst storms? If the answer is no, how can they possibly know how to navigate the chaos that startups live in every day? Forget the glossy reports. The real metric you should obsess over is the quality of the fund's network. No, not a LinkedIn list or a bunch of name drops. The real deal is whether they can open doors that matter, not just to some investors, but to the founders they back when shit hits the fan. If you can't get a hard yes on their ability to connect founders with the right partners, customers, talent, or even tough love, they're useless to you. No fancy number fixes a network that's weak. Next, transparency. If a fund won't look you in the eye and break down exactly where every dollar's going and why, it's a red flag the size of a building. And I don't mean some polished slide deck. I'm talking about brutal honesty about failures, learning moments, and how they're correcting course. If they sugarcoat results or dodge hard questions, don't give them your money. You're not here to fund fairy tales, you're here to back reality, cold, brutal, and raw. You also must dig into alignment, not just on paper, but in practice. How do their incentives actually work? Do they reward scrappy pioneer founders, or just those who look good on paper? Do they push for quick exits or marathon plays? If you don't see clear alignment between fund strategy and your own vision, you're already set for disappointment. Don't let glossy presentations fool you here. Ask, keep pressing, and demand clarity. Here's a brutal one. Look for flexibility. The best funds don't chase trends or stick to rigid playbooks. They adapt. Markets change fast. Startups shift direction overnight. If your fund can't pivot smartly, you'll lose while everyone else races ahead. Check their history for those pivots. Did they double down in good times and cut losses quickly when needed? That says more about future survival than any headline number. Finally, obsession with founder support. You want a fund that acts like a co-founder in the fight, not a bystander counting chips. What does that actually mean? Tight operational help, honest feedback that stings but improves, sometimes even stepping into board fights or hiring woes personally. If they treat founders like portfolio entries instead of humans, you're wasting your shot at real impact. So here's the order of attack. Don't jump at returns first. Start with who's on the ground, their real experience. Then test their network's muscle. Demand brutal honesty on wins and losses. Nail down whether their incentives genuinely sync with long-term builder mentality. Confirm that flexibility is built into their DNA. And make damn sure founders aren't just dollar signs but real partners in the trenches. Do this, and the numbers will follow. Ignore this, and no fancy multiple will save you. Remember, you're not just handing over capital to chase short-term glory. You're locking into a relationship that should multiply your impact, your reach, your truth. So get ruthless with questions, get fierce about alignment, get sharp about history, and don't stop until you see a fund that feels like a fighter, not a salesman. That's how you vet venture funds that actually move the needle. That's how you make your capital work as hard as you do. Subscribe to our YouTube channel and open the featured link to discover more.